Okay, so now let's try to understand about revenue recognition, and for that let's see through one real world example. There is a company whose name is Tesla Incorporation. Now Tesla is in the business of selling full self-driving car, and along with that they provide the softwares to customers as well. Now, the performance obligation is like Tesla has to do two things. Firstly, they need to physically deliver the car, and second, they need to provide the software which is helping to run the car as well. Now, if Tesla is charging, let's suppose $100,000 for the car and the premium connectivity or the software, then when should they recognize this $100,000 in their books of accounts? That is the problem statement. So let's suppose through some methodology we will discuss later, they identified that $80,000 belongs to physical delivery of the car and $20,000 belongs to software. Now the allocation is done split between the software and the car on some standalone price basis. That is a different thing. Now based on that, what Tesla will do, Tesla will simply go and identify and recognize this $80,000 in their books of revenue immediately when the delivery is done, because at the time of delivery all the risk and rewards are being transferred to the buyer. However, for this $20,000, let's suppose Tesla has an I can say contractual term wherein they say that this 20,000 software services will be used for 5 years, and beyond 5 years they will be charging for it. So effectively they are saying that on a year on year basis they are charging $4,000 for these software services. So effectively what you will do, you will recognize these $4,000 in the first year as revenue. And what will happen with the remaining amount? So effectively you will say 20,000 was for software, 4,000 was for the first year. So remaining $16,000 will be your deferred revenue balance. In the second year, when the year will complete, out of this 16,000 you will recognize $4,000 in their books of accounts, and in the third year, fourth year and fifth year you will be doing the same. So these kind of situation may arise in real life, and the companies needs to identify that what is their performance obligation, if they are providing more than one services, how to allocate revenue, and what should be the timing of revenue and what will be the final impact.